Advanced Financial Management Case, Capital Budgeting, IBM. What investments did IBM make in 2006 to 2009 to fund future growth and increase shareholder value? To promote future growth and increase shareholder value, IBM's focus in the 2006 to 2009 period was making 14 strategic acquisitions which cost around $8.5 billion in order to build its business analytics. IBM continues to stress on building the company and making sure to reinvest within itself. Since the dot-com crash in 2002, how has IBM performed in terms of pre-tax income, free cash flows, and earnings per share? Using a yearly comparison of various financial data, it shows that IBM's pre-tax income, free cash flows, and earnings per share have all steadily increased since 2002's dot-com crash. IBM is a corporation seen as a market maker, and the performance it had in the years since the crash show how resilient of a corporation it actually is. Free cash flows was able to double, and earnings per share has quadrupled in the period between 2002 and 2009. In 2008, how much did IBM invest in its acquisitions, in what areas, and how much in net capital expenditures? How much share repurchase, and how much did they pay out in dividends? Was the amount in dividends paid in 2009 higher or lower than the previous year? IBM spent $6.3 billion in acquisitions in the 2008 fiscal year. The software segment was where the company concentrated in expanding through acquisitions, with 10 that took place. Net capital expenditures came out to $4.5 billion in total. Share repurchase cost $10.6 billion, and the company paid out $2.6 billion in dividends. As a growing company, IBM paid out more dividends in 2009 than in the year before. Between 2000 to 2009, what has been the trend in IBM's investment in software, service, financing, and hardware? From 2000 to 2009, IBM made 108 strategic acquisitions as they focused on changing their business mix. They wanted to concentrate on expanding the more profitable parts of the company and contracting those parts that may not have been as profitable. Software accounted for 25% of their business mix, services at 40%, financing at 11%, and hardware at 24% in 2000. By 2009, software had expanded greatly to account for 42% of IBM's business mix, services at 42%, financing at 9%, hardware at 7%. These changes reflect changes in the industry over that time. How does Standard & Poor's rate IBM's senior long-term debt, preferred stock, and commercial paper? S&P rates IBM's at A+, preferred stock A-, and commercial paper A1. Briefly describe IBM's investment in new software. Did IBM amortize more or less capitalized software costs during 2009 compared to 2008? Why was there a difference? IBM classifies costs related to formulation and design as expenses incurred to R&D and engineering. Costs related to the finished product are then classified as an intangible asset. The company amortized more capitalized software costs in 2009 than in 2008 because costs are amortized on a straight-line basis over 2 years. What was the change in IBM's consolidated stockholders' equity in 2009? What were the key factors or drivers of such change? What was the performance in each segment of IBM's enterprise? IBM's consolidated stockholders' equity increased by $9.17 billion as a result of several factors. 1. There was a $10.546 billion increase in returned earnings. Net income for 2009 was at $13.425 billion. Subtracting $2.86 billion paid out in dividends, leaving the company with those retained earnings. 2. There was a $3.015 billion increase accumulated through a positive impact in foreign currency translations on the favorable side of IBM and adjustments made through pensions and other retirement activities. 3. The first two gains in equity were slightly offset by a decrease in stock transactions in relation to 2008 by about $4.39 billion. IBM has 5 major segments: Global Technology Services, Global Business Services, Software, Systems and Technology, and Global Financing. The company as a whole had an increase in revenue from 2008 to 2009. However, some segments had large increases in their revenue, while some had a slight decrease in their revenue. This adds up to 0.1% decrease in revenue from the company segments, but overall, revenue increased due to several other factors mentioned before. What was the impacts of currency fluctuations on IBM's assets at the end and liabilities at the end of 2009 as compared to 2008? Does IBM have any policies or strategies in hedging against such risks? Explain. Assets and liabilities that were denominated in their respective local currencies that were then translated into US dollars turned into more of the parent currency US dollar for year-end 2009 than in year-end 2008. In order to minimize risk in currency fluctuations, IBM uses derivatives in multiple global markets. The company also finances debt with the currency in which assets are denominated, but only uses this method when it is seen to be most cost-effective. To analyze the sources of specific risk, IBM uses sensitivity analysis to determine the impact of different market risk exposures on the fair value of the company's assets. What kind of financial instruments are included in the sensitivity analysis? All of IBM's cash and cash equivalents, marketable securities, short-term and long-term loans, commercial financing and installment payment receivables, investments, long-term and short-term debt, and all derivative financial instruments. The derivative financial instruments usually consist of interest rate swaps, foreign currency swaps, and forward contracts. Explain IBM's process of sensitivity analysis. The company figures out what the risk of loss in fair values would be from the effect of speculative changes in interest rates and foreign currency exchange rates on instruments that are sensitive to the market. Thank you for watching.